Hello and thanks for tuning in to our weekly mortgage and economics segment. I'm Megan Abdelaziz, Real Estate SINY.com's mortgage and economics reporter. The mortgage rates fell yet again this week. The 30-year fixed rate is at 4.41%. The 15-year fixed rate is at 3.47%, and the 5-year adjustable rate is at 3.40%. These drops in the rates came from the government partially shutting down. Besides the government shutdown, there was not too much happening this past week. The only things we took a look at this week, besides the government shutdown, were the Mortgage Bankers Association's weekly survey, ADP's employment report, Americans' confidence in the economy, both weekly and monthly views, and the financial markets. First, we looked at the Mortgage Bankers Association's weekly mortgage application survey for the week ending September 27th, which was released on October 2nd, which is a Wednesday. This report showed a decrease of 0.4% in their market composite index and a 3% increase in their refinance index. It also showed that the shares of refinance mortgages that were applied for out of all applications was back up to 63%. With the mixed signals of the mortgage rates and the government that week, people were skeptical about applying for new mortgages, it seems. ADP released their National Employment Report for September, also on Wednesday. In September, the private sector employment grew by 166,000 jobs, which isn't really what economists were expecting. Small businesses accounted for about 74,000 jobs. Medium businesses accounted for about 28,000 jobs, and large businesses accounted for about 64,000 jobs. Not only was the amount for September's jobs added low, but the revised number for August was also brought down to 159,000 jobs added. With the government shutdown now, the Bureau of Labor Statistics won't be releasing their employment report on time. So these are the only labor statistics we will be seeing for the time being. After looking at those two reports, we took a look at Gallup.com's Economic Confidence Report, which was for the week of September 23rd to September 29th and for the month of September. This report was released on Tuesday, October 1st. In their weekly polls, Americans' views shifted slightly more negative. The poll on Americans' net ratings of economic outlook showed results of 37% of Americans seeing the economy as getting better, while 59% see it as getting worse. In their poll on Americans' net ratings of current economic conditions, it showed that 17% of Americans think that the current conditions are good or excellent, and 38% think they are poor. These two polls gave Gallup a weekly economic confidence index of -22. Their monthly average indices were also a lot lower than they were in August, since the second half of September had the worry of a government shutdown. Their index for the poll on Americans' net ratings of economic outlook came in with results of -18 for September. Their index for the poll on Americans' net ratings of current economic conditions came in with results of -19 for September. With these two poll indices, Gallup's monthly economic confidence index dropped to -19. The financial markets were mostly affected by the government shutdown. In the stock markets, between Thursday, September 26th and Wednesday, October 2nd, they had a ride back down. The Dow Jones went from about 15,274 on that Thursday and dropped to about 15,133 by that Wednesday. The S&P 500 had a slightly different story than the Dow Jones between Monday and Wednesday. It started out on that Thursday at about 1,694 and then dropped down to about 1,681 by closing bell Monday, September 30th. From there, it went back up slightly, then dropped a little at opening bell on Wednesday and ended slightly higher at about 1,693. These declines in the stock markets were mostly from investors' worries about the shutdown happening, from it actually happening, and from the lower than expected ADP employment report without having a government employment report to compare it to, since the government is shut down now. The 10-year U.S. Treasury bond yield had a somewhat steady ride between Thursday, September 26th and Wednesday, October 2nd. It had started off at about 2.66% on that Thursday and went down slightly to 2.64% for Friday and Monday. From there, it went back up to 2.66% on Tuesday and then ended at 2.63% on that Wednesday. The yield moved up and down due to the uncertainty of what was happening with the government and with the people wanting safer investments. If you don't think the government shutdown is going to affect you, you might be wrong if you're trying to buy a house. To be able to close on a loan, lenders need income documentation from the Internal Revenue Service. But with that closed, they won't be able to get the documents until it is open again. If you are trying to buy a house and your lender didn't get those documents before the shutdown, the closing on the house will be delayed. With the government shutdown, we will not be seeing any economic data reports released from them. So with no government and no economic information, we will just have to wait until next week to see where the mortgage rates go next. If you would like to know more about the government shutdown, you can visit our trendingsiny.com website to read the full article, and you can check back with us later this week for more updates. Thank you for watching, and be sure to like us on Facebook, follow us on Google+ and Twitter, and subscribe to our YouTube channel. Also, don't forget you can visit our trendingsiny.com website, which is a division of realestateSINY.com, to read the full mortgage and economic report. Once again, this is Megan Abdelaziz with realestateSINY.com. RealestateSINY.com is a full-service real estate brokerage located on Staten Island. If you're looking to buy or sell your home, you can contact us at 718-966-9669, and one of our experienced agents will gladly help you. If you simply just want to browse the latest listings or keep up with the market statistics, you can visit our website at realestateSINY.com.